Hello. Hello. Good evening, everyone. On behalf of ICI, welcome you all of you on the event on internal auditing, fraud risk assessment. As you all know, we gathered in the webinar. We recognize the critical role of internal auditor play in the identifying and how to mitigate the fraud risk with the organization. And as you know, all are CA, the ever evolving landscape of business and technology has increased, and the complexity of the fraud risk also increased. So, how to mitigate is a part of for the internal audit. And our today webinar aim is to explore the latest trend and challenge in the fraud risk assessment, how we can mitigate this risk, how can we use this platform to knowledge sharing and networking amongst the professional. And during the session, you observe some questions you can ask at the end also. Before we begin, we start, I would like to thank you, our speakers, and all the attendee and all the management team. Today, our speaker on the internal audit, we have CA Huzefa Onwala sir on complex business and challenges, delivering tailored solution. His expertise encompasses working with the government authorities, multinational corporation, and privately held businesses in such area as a enterprises risk management, internal audit, business planning, SOC audit, setting up and managing business function, fraud investigation, and the design of internal financial control. As the founder and senior partner of JHS and Associates LLP, is a Mumbai firm, have the 13 office across India. Sir has played very strong role in the firm's growth and success. He has also served as a non-executive board member for the private companies and as an independent member on the technology committee of an asset management company. This is our good, we can say it's a big achievement for us that sir is with us for sharing the knowledge. So surely we also can have the chances to become internal audit and find the risk and then mitigate them. So with this, I request our speaker to take session.
Thank you, Dayaji, for your kind words of introduction. And I would like to thank Arunji and everybody at the Board of Internal Audit and Management Accounting for inviting me today evening to speak on the subject of fraud risk assessment. This happens to be a subject that is very close to my heart. And in the last 25 years of
Arun sir, is there any issue?
am I
Ma'am,
audible?
technical support person is there.
My voice audible? Is my voice audible? And my
Yes, sir, now coming.
okay. So yes, so I will share my screen also to just take you through the PowerPoint slides. I hope the screen is also visible to all of you. Great.
Yes, sir.
So the subject of the day is fraud risk assessment. The subject is pretty close to my heart. I've got some practical experiences of doing forensic investigations in the last 25, 26 years as an internal auditor. And that has really helped me build my domain knowledge on the subject. So what I definitions, statistics, and create a baseline and a context around how we do fraud risk assessments. Part two will cover certain good practices, processes, and a practical example of how do we do a fraud risk assessment exercise. Then the third part we will go through certain typical red flags that we can observe as internal auditors and take certain Sorry about that. I lost you in between. I will just restart again. In part one of fraud risks, we were covering the concepts and the context setting to the fraud risk assessment exercise. Before we get into the practicalities of fraud risk assessment, let's understand conceptually the meaning of the term fraud, what fraud means to an organization and to an auditor. So there's a section under the Companies Act 447 which defines the term fraud by way of an inclusive definition. Fraud includes any act, comma, omission, comma, it's a very wide definition under the Companies Act in terms of coverage of the term fraud. So the elements that are embedded in the definition are primarily three elements. There should be an intent to commit fraud. Then there will be a scheme to execute the fraud, which is known as the deception. And lastly, there would be a wrongful gain or loss on account of the fraud scheme. However, generally, even if the intent is proved, a mala fide intent, as we call it popularly, if it's proved that a intent or a scheme is committed, is created or developed to do a fraud, it suffices as far as the courts are concerned. Primarily, there are six types of frauds that are classified and reported globally. First are unethical conduct or behavior such as theft, robbery, deception, breach of trust, a breach of contract, in an immoral manner. Second is fraudulent financial reporting that includes misappropriation of assets. It includes revenue inflation, misapplication of accounting policies. Third is bribery and corruption. Fourth is money laundering. Fifth is computer crimes and extortion. And sixth is conflict of interest. So these six classes of frauds holistically constitute the family of frauds. And then there are, segments and sub-segments and evaluation of a firm legal proceeding. So essentially, forensic audit exercise collection, gathering of evidences, and proving the theory of fraud and the modus operandi of a fraud in legal proceedings. Whereas fraud risk assessment is a part of risk management or internal audit activity to build resilience of the organization towards the subject of fraud and to strengthen also help us create our baseline in terms of the fraud so it would involve company follow state. Now we all know that there is a lot of private equity funding, there is a lot of venture capital funding, angel funding. There are debt situations in organization where there is a lot of debt that is onboarded on account of the stress that is created on the financial position of the company. The CFOs and the CEOs are tempted to tamper with the balance sheet and the financial statements. We have seen n number of examples in the press over the last few years. So this could be one of the key scenarios for the internal auditor in terms of the ability of somebody in the system to falsify the financial statement to attract investors or to retain investment in the business. Uh, Another fraudulent act could be a business owner hiding assets before before fake. So we were discussing various fraudulent acts. Or gaining promotion, presenting a fake passport at the immigration counter, and so forth. So these are some fraudulent acts that are, uh, uh, quite popular in the Indian situation and scenario. We may not be able to do all the fraud risk scenarios, uh, at a point in time in the internal auditing exercise. However, we can make a effort to months or maybe one scenario. So this is just to open up your thought process in terms of the fraudulent acts that are taking place. These are some examples. Now let's look at the differentiation between a forensic audit exercise and a fraud risk assessment exercise. So and fraud risk assessment exercise is concerned, what are the differentiations? First is the purpose: to investigate, gather evidence of suspected fraud or financial misconduct is the purpose of forensic audit. But as I alluded earlier, that fraud risk assessment primarily consists of identifying, assessing, and mitigating potential fraud risks within an organization. As far as the scope is concerned, fraud risk assessment, has got the potential to discover red flags, vulnerable areas in the organization within the scope of the internal audit activity, whereas forensic audit is a very specific exercise that is targeted on incidents and allegations leading to a fraud. As far as approaches are concerned, forensic exercise involves detailed examination of financial records, transactions, and activities, whereas fraud risk assessment is a systematic evaluation of processes, controls, and risk factors. So that's completely distinct from forensic audit. From an outcome perspective, is more planned activity. Fraud, forensic audit is based activity and calendar execute budgeted and the big. For example, one of the fraud risk assessment activity could be honeypotting against the procurement of the commercial team. What means that you can do a mystery a visit planning in the government office or to a commercial office, kind of treatment that you're getting. And if there is any possibility additional income. Let me just try to switch to another internet connection in my office. I think there is too much of disruption, so please give me a minute. I will be rejoining immediately, trying to switch my internet connection because there is a constant disruption in the internet bandwidth. Sorry about this. I'll just rejoin in a minute, please. Yes, sorry about this. And I'm back in the session again on the business seasonality of the company. And this exercise is not a forensic exercise. It's a planned exercise. We don't want to surprise the board or the audit committee or any of the stakeholders. we want to ensure that we are taking the right steps in order to conclude a fraud risk assessment exercise effectively and properly. There are multiple the surprise element may be taken out of the entire exercise. In terms of involvement, or relating to infrastructure, real estate, or relating to banking. So there are technical advisors and there are technical experts who are subject matter experts who would help you design a more detailed, comprehensive and a more in-depth manner, even as far as supply chain related risk exercises are you may need fraud risk assessment exercise and may need technical expertise as well. From a reporting perspective, just like we create a ICOFR or IFC risk register or a ERM risk register, a fraud risk register needs to be created, identifying the various fraud risk scenarios, the likelihood, impact, and the mitigation plans all put together should be put in the fraud risk register, which becomes a process to be followed by the internal auditor. uh, as far as a practical example is concerned, I gave you one on the procurement side. On the commercial side, there are many others that will follow while I take you through the slides. Now, let's examine the significance of fraud risk assessment in contemporary internal auditing. Why do we need to do a fraud risk assessment? Signal or a alert or a red flag, which the internal auditor can present to the board, to the committees, and to the stakeholders, forewarning them of a potential fraud situation. It will be a proactive measure on the part of the stakeholder, the organization. On the organization in terms of any reputational loss or any cyber frauds are concerned in the country. Apart from cyber frauds, also the global trends suggest that at least 6% of revenues of any organization is at risk, to frauds. There is a vulnerability of organizations towards the fraudulent incidents that are happening, and about 6% of revenues of any organization, however well governed it may be, is at risk to fraud or fraudulent acts. Second is growing expectation gap between the audit committee and the internal auditor's performance. The, how much ever we may say that the auditor is a watchdog and not a bloodhound, but the expectation of the regulatory body and the internal auditor frauds or even unearthed frauds in the organization as part of their testing work and auditing work. So there's a growing expectation and a growing voice in the industry that the auditors must unearth frauds. Now, how do we safeguard ourselves against this growing expectation? Because the general terms of reference of internal audit work always mentions that, we disclaim that we are not a forensic auditors and we are internal auditors. However, to minimize the gap between the expectation and our performance, it would be as advisable for us to learn the art of fraud risk assessments and carry out certain fraud risk assessments, identifying fraud risk indicators, assessing how well the organizational controls can perform against that, and give a feedback to the committees and to the stakeholders. Traditional internal audit does not add any value in a sustainable manner. A fraud risk assessment exercise will add tremendous value. SI 11 of the ICAI uh, demonstrate assessment exercises. Now let's look at the fraud statistics, which will give us more a baseline in terms of conducting fraud risk assessment exercises. So 73% of frauds are generally committed by men. So there is an element of diversity in frauds being committed in corporates and industry. Controls being exercised is very well versed with everything in the organization and is blindly trusted. When he or she reaches such a stage, then he or she is in a position of power or authority to commit a large value fraud. Petty frauds, bribery frauds are committed plenty. There could be any fraud in the organization. The median age is between 40 to 50. 5% of fraud perpetrators have previous conviction record. So only 5% of fraud perpetrators had previous conviction records. So most of the fraud incidences are done by people who don't have a conviction record or a fraud record in the past. But yes, they could have a record of doing certain violations, company policy violations, etc., etc., jumping jobs. So that may come out in the background screening exercise that could be useful to identify the fence sitters. But generally speaking, statistics suggest that 5% of fraud perpetrators had previous conviction record and 95% didn't have. 54% of fraud victims, companies in particular, recovered nothing when they did a forensic or an investigation exercise. 31% made partial recoveries and only 15% recovered all the losses. So, what it means is that once the fraud is done, the damage is done, and the company is not able to recover money effectively or go after the money trail to recover money from the fraudster. Only 15% recover. So, prevention is always better than detection and ultimate recovery. So, fraud risk assessment is a tool that can be used for investment as part of the internal audit activity to have better resilient controls. Internal control weaknesses were responsible for 50% or more of fraud cases. What are the top three most common fraud schemes that were experienced by organizations? First is asset misappropriation. Second is financial statement fraud. Third is corruption. So these are the top three schemes. As far as tips and whistleblowing is concerned, tips and whistleblowing continue to be the most effective way of detecting frauds. Tips most likely to come from employees through various channels like telephones, emails, WhatsApp messages, and they immediately constitute a red flag. And various channels of whistleblowing, like there could be fraud hotlines, there could be numbers, there could be email boxes, there could be various other channels that could be used by the organizations to smartly listen to people within the organization as well as outside the organization, like customers, vendors, etc. So the did, and this happens to be the topmost technique to detect frauds that are going on in the organization. Even in the listed space, in the listed entities, in a single financial year, a large number of whistleblowers, come out and give a lot of information, not only in the anonymous way, but also in the public domain and the social media domain. So you'd be surprised to know that, almost anywhere between 3 to 5,000 whistleblowing complaints are received as far as listed entities are concerned. And the largest concentration of these complaints a few years back happened to be this metrics again shows you the various fraud schemes that are run by fraudsters and the various mapped against the various sectors. So when you see the left corner of the slide, the dark blue vertical column, you will see the list of sectors and industry. You'll see the count of cases that were detected, and then you see the fraud scheme. So you have billing, cash, cash on hand, check payment, tampering, corruption, expense reimbursement related, financial statement fraud related, and so forth. So you have various columns here that demonstrate how frauds have been committed across various sectors. So when you analyze this metric of fraud schemes vis-a-vis the various sectors, you quickly realize when you see the percentages. So when you see all percentages above 40, like 60%, you see here in the energy sector, which shows that the large number of fraud schemes are on the corruption side in the energy sector. Likewise, as far as the information and related processing industry is concerned, again you see that corruption levels are very, very high. In the technology sector, where software contracts are being released, issued, again corruption is almost 65%. So likewise, if you see the corruption related statistics, and you match it with the various sectors, there are top sectors that contribute to the corruption related fraud schemes. From a billing perspective, again, you see large concentration of fraud cases in the healthcare sector, in the NGO sector, where a lot of donations are received, etc. So again, you see concentration of fraud cases in these vulnerable areas. So this is a good statistical slide. So if you happen to do internal audit in a specific sector, like the NGO sector or the technology sector or the infrastructure sector or the energy sector, you can just check out from this slide, which is given in the ACFE report to the nations annually. They give a lot of statistics on the nature of frauds being committed sector wise, and you can design your fraud risk assessment program on the basis of this uh, uh, metrics. Now, while we are looking at designing the fraud risk assessment program, we can also look at this information, which is quite useful, which are the top 25 fraud risk scenarios across various sectors in India. So what I've done is that through some research, I have just bucketed the various fraud risk scenarios and given one-liner explanations against them to give you an understanding of how to develop the scenario. So banking and finance, the first fraud risk scenario could be loan fraud. Against that, if you see the explanation column, is falsifying documents to obtain loans. So you could falsify documents, in terms of KYC records, in terms of mortgage records, etc., to check as part of the internal audit, concurrent audit process, or any other continuous monitoring process, that how effectively this is being identified, or being captured by the vigilance and the various monitoring parameters that are set in by the bank. Credit card fraud, unauthorized use of credit card information, identity theft, phishing attacks, money laundering. Likewise, in telecommunication, SIM card cloning, subscription fraud, billing fraud, call forwarding fraud, mobile payment fraud, retail industry, return fraud, return of materials ordered online, gift card fraud, e-commerce fraud, inventory theft, coupon fraud, healthcare, medical billing, prescription fraud, insurance fraud, identity theft, kickbacks, uh, technology, cybersecurity breaches, IPR, intellectual property theft, insider threats, software piracy, data manipulation. So these are some examples of top fraud risk scenarios that could be designed in as part of your internal audit work, and designed in consultation with the management, and implemented in a very, very smart, intelligent, and effective manner in the organization. Now, layers within the organization that can be tested as part of the fraud risk assessment exercise. And these controls can be specifically tested in the context of what the fraud risk scenario is, or how you have defined the fraud risk scenario. So, say, for example, if it's about inventory theft, so then you could check the physical security measures in the organization, the coverage of the cameras, the monitoring at camera points, the logs of the cameras, etc. So in one of the fraud risk assessment scenarios for a healthcare institution, we did a spot check working of the cameras across the organization, and we realized theft could happen or occur because over a period of time, there is so much of changes that keeps on happening within the organization, and you realize that cameras end up capturing lot of information that is irrelevant and not relevant to the fraud risk scenario or situation. So physical security measures could be tested effectively. Background checks could be tested effectively in terms of a ghost employee scenario, fraud risk scenario, as far as payroll process is concerned. So that can be tested effectively. Segregations of duty can be tested. Then, of course, a lot of other things are there like data analytics, anti-fraud policies, incident response, compliance checking, then the training, learning, and development part, the policy governance part, the compliance monitoring part, here along with the so these are the top 20, 25 fraud prevention controls that are practical and effective in the Indian context. I've listed it down for you. Third party risk management, as far as vendor management, monitoring, evaluating is also a very on the nature quantum of frauds a situation analyzed top 100 banking frauds. So these are some key highlights that I would like to share with you and present to you, and you could use it effectively in your internal audit work and in your fraud risk assessment work. So the top 100 banking frauds that have happened in India and where the Vigilance Department has played a role in terms of investigation. These are top 8 red flags that have come out of that. First is fake invoice generation and shipping bills. So again, could be in the case of related revenues are concerned, but this is a red flag. So any invoice that gets generated by any organization, what is the underlying supply of service and goods, and whether it is legitimate, genuine, bona fide, and there's movement along with example of a fraud risk scenario that can be taken up. So physical verification of inventory, for example, on an annual basis, and testing that whether it has been done or not done would be one of the critical things that can be evaluated, or the extent to which it is done. Purchase of large number of assets on the names of employees and Benami transactions. Turnover bubble created through related party transactions. Lack of intelligence sharing authority, indicator that can be picked up in the data analytics, that wherever there is a loan taken or wherever there is a large quantum of money that is taken towards a particular purpose, but rather than meeting the purpose, it is transferred to other entities. And then from those entities, it is again transferred somewhere else. So from an end use perspective, could be one of the good indicators to be monitored in the risk scenario, especially in the context of NBFCs. Efficient delivery of goods and services. So again, lining fraud red flags that are analyzed by we see the top 100 banking frauds report. Now let's also look at some new age frauds that are taking place, the digital age frauds. So businesses are being targeted for invoice payments, business emails by impersonating as vendors, employees, and this has also shifted from business email compromise to WhatsApp compromise. Identifying cases of well-to-do individuals, accountants, compromise. We'll look at the entire modus operandi in the next slide. But what do digital age fraud? They generate a fake invoice. They generate a fake avatar of the person, voice of the person, impersonating like a husband speaking to a wife or a husband speaking to a son or a daughter. Fictitious emails to trap you in making payments. Uh, Emails requesting change of banking information by employees, by vendors. Another strategy used by fraudsters very effectively, where they send innocent or harmless emails to your mailbox and try to trap you in sharing of information that is sensitive and confidential in nature. Now, how do they do this spoofing and how do they achieve this entire mission? So, there are again 5 categories of people that are being targeted. First is the payroll staff, or the staff that does a lot of payment processing in an accounting office of a company. They are targeted. Second is real estate transactions. So they get a smell and sniff of the real estate buying and selling of properties that are business email is compromised, and through phishing emails, doing grooming of that target, like observing and monitoring the target over a period of 1 or 2 months in terms of behaviors of that target on emails, on WhatsApp, etc. Then trying to learn and exchange information, and finally trapping the target to doing a wire transfer. So while you're designing a fraud risk assessment scenario, it would be worthwhile for us to break down the entire process of phishing attack into these three, four stages, and it would be very useful as an internal auditor to design a fraud risk scenario along with a IT technical expert to carrying out, with the permission of the organization, to carrying out a planned phishing attack. Now, say for example, if you carried out a gaming phishing attack on your target audience, and if people are willing to click on the link and play the game through the WhatsApp message, it immediately denotes a behavior that is against the accepted policies of the organization. So compromising your mobile number, your email ID, your personal credentials, etc. And as a result of that, you get trapped to doing a lot of fraudulent activity which you are not aware of or you didn't intend to do. So the behavior is breached as far as the internal auditor is concerned. And with a subject matter expert certain level of activities that can add value to your client. Now let's take some more examples of the digital age fraud. So there are two things here which I have demonstrated, which I have shown to you on the slide. First is relating to a hacker attack as far as a media agency's company is concerned. So a supplier to a global 2000 media company. So the fraud details. So you'd see detail of the fraudster, which is a hacker. Method is business email compromise. Fraud details: hacker breached a supplier's email system, found supplier's e-invoices on the global 2000 media company, and be paid for the invoices they had submitted, which triggered an investigation. Now, failed internal controls, supplier email security controls, password controls, and system authentication. So all these controls were failed. So in a fraud risk scenario, typically this could be tested out by the internal auditors effort. Likewise, if you see vendor master controls in the next scenario, again, if you check the email ID, this is again a very common thing. It is jsmith@ticketsgroup.com versus jsmith@ticketsgroup.com. So when you see the email ID very carefully, you will realize what is the compromise in terms of the words in the email ID are concerned. So G is very smartly replaced by Q in the second example here. So you'll not even realize that what is the email ID that is compromised. You'll innocently write or reply back to this email ID thinking that it's a genuine email ID. Now, coming to in terms of new age fraud schemes, this is more individual and less of corporate in terms of crypto schemes. So we all are aware that there are a lot of illegal, illicit crypto schemes that are taking place. Cryptocurrency statistics that you will see on your screen. Again, part of the global statistics published by the Association of Certified Fraud Examiners on how fraudsters use cryptocurrency to launder money. So almost 47% of conversion of misappropriate assets that are done. So fraud schemes, generate a lot of illicit money or illegal money and proceeds, and they get converted into cryptocurrency. So statistics reveal that almost close to 50% of fraudulent proceeds are converted into cryptocurrency. Bribery or kickback payments are made in cryptocurrency. Internal auditor to even achieve or even think. But at least a simple fraud risk scenario can be created in terms of checks and balances to rule out the possibilities of cryptocurrency dealings by the employees of the company. So it could be in the form of declarations, it could be in the form of some specific verification checks. Of course, agreeable as part of the code, agreeable as part of the philosophy of the organization. Uh, is where companies falsely claim to be environmentally friendly where cheap than they were. This deception led to fines totaling to around 34.69 USD billion. That's a huge sum of money. So they cheated regulators, they cheated customers, etc. And it came to be known as Dieselgate. So a greenwashing fraud risk is very real in today's scenario with ESG, climate change, especially in the top 1,000 companies listed in India, and quite a lot of other companies that have to comply with green norms, environment norms in India, may possibly be cheating you there as well. Toyota, the company was fined 180 USD million for failing to report defects in vehicle emission controls, misleading consumers about the environmental impact of their cars. Keurig claimed that its single-use coffee pods, uh, those are the mugs, were recyclable, but they were not actually recycled programs. This led to a fine of 3 million. H&M, the fashion retailer, was fined for making unsubstantiated claims about the sustainability of its products, misleading consumers about their environmental benefits. So at the last count, the National Green Tribunal in India had got thousands of consumer complaints against companies and corporates on the subject of greenwashing. So it's a new age fraud scheme, and this fraud scheme could be uh, studied, evaluated, and tested by internal auditors as part of the fraud risk assessment program. Now we'll come to the process, framework, and practices of fraud risk management, part two of the presentation. So here I have outlined to you the COSO fraud risk management principles. So you will see on the slide that there are 16 principles that are divided into control environment, risk assessment, control activities, information communication, and monitoring activities. These are the five building blocks as far as the COSO framework is concerned. And within that, enough. So the first principle is that whether the organization to high integrity and ethical values regarding managing fraud risk. So, any fraud risk assessment program cannot be taken in isolation and executed in isolation. There has to be science, people that what the internal auditor has started as a new activity. And as I mentioned, activity is always supposed to strengthen positively the internal control environment, not deliver surprises, and not kind of engage the organization on the negative side. It is more a positive activity. So what is best required to be done is that when a fraud risk assessment exercise has to be initiated and implemented, it has to have sponsorship in terms of a fraud risk management program. Possible from the board important is that the and significance existing fraud control activity talk in India also required, especially the and not only the service levels, but also to check whether internal controls are effectively being performed or not. So once the fraud risk management program is in place, along with that, a charter and entire practice initiation can be done for designing fraud risk scenarios, fraud risk assessments on a quarterly, half yearly, or annual basis, depending on the risk appetite of the organization, depending on the level of investment the organization desires to make. The third part is organization should select, develop, and deploy, establishing a communication process. So it's an improvement activity. So it should be a coordinated approach amongst various stakeholders. And then there should be an element of consensus within the organization for continuous improvement. And lastly, from a continuous monitoring perspective and improvement perspective, a fraud risk management program should also be evaluated by the management for its effectiveness. It's not only the fact that because the organization is going to be implementing in new set of controls, strengthening existing controls, etc. So it should be a improvement and a cycle that is continuously improving. So these are the 5 principles that are listed in the COSO fraud risk management principles document, which could be considered as best practices for us to look at a fraud risk assessment exercise. Now, let's look at the entire process of fraud risk assessment exercise and what are the features of fraud risk assessment exercise. So the first and foremost is the knowledge of business. So knowledge of business has to be very strong as far as the internal audit team is concerned, who's initiating the fraud company has got a one of the key critical fraud risk areas is spurious gold that is sold at the gray market being introduced at its branches, spurious gold being introduced at its branches and taken as gold loan purpose of taking a gold loan actually example of spurious gold. That are scenario has been written down and has to exercise fraud controls that are listed in the SOP document of the gold lending company are exercised or not exercised. And thereafter reaching a conclusion. So to share with you certain practical insights when a fraud risk scenario of a similar nature was undertaken by my team in the past. Certain branches did offer a loan against spurious gold after understanding that it is spurious gold. They detected that it is spurious gold by walking the customer, the decoy customer, across to another branch of another company, saying that this is possible have with across the road neighbor of another. So this kind of a situation emerged where actually we could unethical and immoral behavior of the branch staff. The internal controls were working very well there. They did all the testing and they identified that this is spurious gold and not fit for lending purposes. And we will make a police complaint because you have tried to do this. But in the same breath, then they offered to help also the mystery visitor by showing some encouraging signs and leading that person to another branch of another company existed. And it should be happening in a concerted manner with the internal audit team, vigilance team, or the company in such a way fraud risk assessment scenario that is being executed. The person personal data being exchanged, etc., and so forth. So managed system should not cross the line and should not cross the red line. You should be very clear in terms of what you can do, what you cannot do, how you are going to be supporting the organization in the fraud risk assessment program, and carrying out the responsibility, in terms of corrective actions and process ownership to be taken up, and how to make it a sustainable activity over a period of time. So, features of fraud risk assessments overlaid with certain practical insights that I've given you on this slide. Now, let's go to the steps. The steps involve identification of fraud risk, doing scenarios, so making three, four, five scenarios, and in these scenarios, then you could have like forged invoices, you could have for testing customer service levels in the scenario. Say, for example, if you are going for a retail outlet of a large company, and the retail outlet has to be tested for customer service. So maybe the decoy customer or the mystery shopper could go and wait at the reception or the counter just to assess the way things are happening first, to get a sense of how the retail outlet is performing, etc., and then get into the shopping mode after calming nerves and after settling down, and then executing the scenario. As far as back office activities concerned, you could introduce a forged invoice with a forged signature with the permission of the CFO's office to test the waters of the accounts payable team, the invoice processing team, especially in cases where you have outsourced the entire payable process. So where there are a lot of concerns where whether the payment validation is happening accurately or properly or no, and there could be a possibility of collusion. So you could design the fraud risk scenario, identify the fraud risks with the management team, document it, do a dry run of what are the execution steps to be taken up, and then execute the scenario. Also, I would suggest that you do a ranking and a rating of materiality of the scenario, because you want to really add value to the critical processes of the organization, and you don't want to end up doing petty fraud risk scenarios, which is consuming a lot of time, efforts, and the results are not coming to the advantage and to the benefit of the organization. So what process you want to choose, and where there are more vulnerabilities from the process, those lessons can be documented, and a communication session can be held in terms of relaying back the results and the decisions to be taken in terms of strengthening internal control. So these are some process steps. Now let's go to how to execute. Um, As internal auditors, we are well versed in terms of auditing employee claims relating to travel, relating to accommodation, relating to conveyance, relating to various types of reimbursements that the organization and the client company is giving to its employees. And there are various stages also. So there is a stage of submission of expense claim, there is an approval stage, there is a processing of claim, then there is a accounting categorization of expense, etc., booking of that. Then there is, reimbursement phase, etc., payout phase, fund transfer phase. So you could break down the employee expense claim processing, introduce certain fraud risk scenarios into the value chain of the employee claims processing, and then test waters to check at each stage. So it could be like in the past, when we have discovered certain things like reimbursement towards travel claims for hotels, uh, for a lot of other facilities offered by organizations. You could try to introduce a scenario by changing, say, the date of the claim, date of the underlying supporting documents. So altering the evidence to see with the permission of the management of course, and part of your overall contract, to see whether that that claim goes through the system or not. Also breaching of limits, monetary limits. So if a particular employee is going to be claiming only up to say 10,000 rupees for a particular hotel stay as part of the overall policy limit, but you could squeeze in a claim of say 15,000 rupees and whether that gets processed or not. So depending on the nature of risks being evaluated by the management, past history, etc., you could break down the employee claim process into various stages to see what are the kind of fraud risk scenarios that you can build in, including duplicate claims for the same invoice in the same year. So like that, you could try to execute certain fraud risk scenarios as far as the employee claims are concerned. You can set the process, do the fraud risk scenario, check what are the expected controls to be exercised, then see the execution and exercise and see whether those expected controls were indeed exercised by the management effectively or not exercised by the management effectively, and then give out your recommendations. Now, what are the various fraud schemes that fraudsters undertake, and how do they conceal these frauds from being unearthed by the internal auditors? So again, the ACFE report is very, very useful, and they have given a laundry list of fraud schemes and how they are concealed by the fraudsters. So the concealment of the fraud scheme is done through various mechanisms which are listed here on the slide. First and foremost is creation of fraudulent physical documents. So there is a chain of documents that are created to conceal the originality of the fraud. Alteration of physical documents, alteration of electronic documents, alteration of sorry, destroyed or withholding of physical documents from the auditor's office, created fraudulent transactions in the accounting system, deleted or withheld electronic documents or file, and so forth. So the list continues. It's a very long list, including creation of fraudulent journal entries, forced or altered account reconciliations, forced or altered account balances in the accounting system, altered journal entries, deleted or omitted journal entries altogether. So, one of the most popular schemes asset and liability. Income can become a liability and asset can become an expenditure, or vice versa can happen because financial statements are rarely coming out of or the accounting packages and being signed off. They are all ported into Excel spreadsheets, and from Excel spreadsheets there are a lot of out of book adjustments that happen, and finally the sign off happens, casted in the various schedule formats prescribed by the authorities. So in between that journey, there is a lot of jugglery that is possible and alteration that is possible. So internal auditors could take up various specific scenarios around version controls, around audit trails, on the Excel spreadsheets in terms of password controls, checking formula checks, etc., to see whether we can eliminate any specific fraudulent financial reporting risks. This is a best practice example from the Australian authorities, Commonwealth Fraud Prevention Center being run in Australia by one of the leading uh, program countermeasure metrics, just like we have a risk assessment metrics, to grade internal audit observations into high, moderate, low, very low, etc. They have designed a metric system as far as is concerned. So it has got the rating criteria in terms of the effectiveness of the anti-fraud controls, how effective they are, how so you could grade the anti fraud controls and the quality and the and give effective effective and ineffective, and then you could see you could give certain percentages in terms of the effectiveness of the controls. So like how you give internal audit ratings as part of the fraud risk assessment, when you give out a report, you have tested the internal controls as part of your overall vision to test the strength of anti-fraud controls. You can give it in the form of a green, amber, and red matrix depending on the percentage of testing, error rates, the strength of internal controls through this kind of a matrix where you give qualitative considerations as well as the action required. Now let's look at part three of the presentation, that is the red flags. We've understood the concept in terms of the frauds, in terms of fraudulent acts. We went through some statistics of frauds. We went through the governance process of fraud risk assessment with a practical example of how we executed certain fraud risk scenarios and certain best practices from COSO. Now we turn to part three. Part three of the fraud risk assessment. Typically, we will learn about typical red flags that the internal auditor or the auditor should look out for or should see and should check, and then, if required, could become a fraud risk indicator uh, for the internal auditor to focus on. So let's discuss this red flags a little bit in more detail. So while we are executing fraud risk assessments, we could consider looking at these red flags as far as employees, vendors, suppliers, third parties are concerned through Google searches and through screening databases. So as I mentioned that you may have to use certain subject matter experts while you're executing or implementing a fraud risk assessment program. So one of the subject matter expert is a person who has got deduping database capabilities and is able to give you valuable information of certain names, certain addresses, certain PANs, etc., which would allow you to conclude that a person name appears in the negative database or listing as far as a fraud risk scenario is concerned. So through that, you could get a red flag and you could include that as part of your internal audit findings also. If there is a supplier that postpones the right to audit, or if there is no clause in the contract with the supplier supporting the right to audit, itself is a red flag. Even the regulatory requirements, especially in the financial services sector, now require that all vendor contractual obligations should have a right to audit clause. Third is concealment of vital KYC and credit information. So if you are in the process of registering a vendor with the organization for doing business or for supplying certain services and goods, but the vendor is not forthcoming in terms of supply of vital KYC and credit information, then that is a red flag. Frequent changes in the senior management of the third party that you're dealing with. Liabilities appearing in ROC search report not reported by the borrower in its annual report. This is more from a banking perspective. Material discrepancies in the annual report of the service provider, not routing of sale proceeds to bank. Now, this is a clear red flag. Heavy cash withdrawal in loan accounts, again from a banking NBFC perspective, non-submission of original bills, increase in borrowings despite huge cash and cash equivalents in the borrower's balance sheet. Now we come to bidding red flags. What are bidding red flags? There are a lot of organizations that are regularly engaging in tendering activity, in bidding activity to win business, or the procurement and the commercial department is inviting a lot of bids from suppliers and from third parties. So there are some typical red flags here. Winning bid is too low when benchmarked with the past experience and industry standards. So if there is a RFQ or RFP, and in response to that, you award the bid to one of the lowest bidders, but the price at which the bid is done is very low, and it doesn't go well with the previously awarded bids or with the industry experience. So clearly, there seems to be certain a red flag there, because either the supplier wants to get into the winning position by compromising on quality of services and deliverables. That could be one of the big red flags there. So it could be a situation that could impact the organizational image and performance in the future. Majority of bids have very close price range, similar terms and conditions, and technical specifications. So this is another red flag that there is a lot of similarity as far as the price range is concerned, and terms and conditions and technical specifications are very similar, and across not one, two, but multiple bids that have come. Common contact points, addresses and numbers of bidders, intercompany connections amongst bidders, related parties, commonality. Common bidders number of bidders, numbers of bidders in terms of mobile numbers, contact details, intercompany connections, commonality, party, and for the purpose of winning the bid is given by multiple agencies related to each other. So like a bid rigging kind of a situation. Internally good to go rated vendors, not part of the bidding list. A disqualification of good suppliers right from the beginning. So you may have a history of a lot of vendors who have given bids and done good work in the past. However, they are disqualified from the bidding list if there is a history of any whistleblower complaint received in the past, but there is no action in terms of the vendor scrutiny, examination, investigation, and rather the vendor is being given opportunity to now do more business with the company, could also be a red flag. Specifications that are favorable to any one vendor. So clearly, these are all bidding related, tendering related red flags. Could be potential fraud risk scenarios where tendering is one of the major activities in the company, could be taken up by the internal auditor to check whether the tendering process, the auctioning process is effectively working in the organization or not. Acceptance of late bids, changes in specifications after bid opening, suppliers awarded contracts disproportionate to the size of their capability, their net worth, and their income statements. So these three are more red flags that can be considered as far as the bidding activity and tendering activity is concerned. Acceptance of late bids, changes in specifications after bid opening, suppliers awarded contracts disproportionate to their size. So this concludes the section on procurement and bidding related red flags and fraud risk indicators. Now let's move on to few more fraud risk indicators that we could evaluate as part of our program is concerned on fraud risk assessments. These listings are coming out of practical experiences, out of various auditing pronouncements, out of various real life situations and scenarios as well. So first is that unusual transactions characterized by incompleteness of trail, missing documents, lack of authorization, shared access or sharing of passwords, splitting of authority limits, which is very common in terms of procurement activity. So the procurement team is aware that the authority to sanction can sanction up to 25 lakh rupees. That's the limit for a particular person. So any procurement activity that is done, they could ensure that the vendor PO is split below the 25 lakh rupees into two POs, multiple POs, three POs, etc., so that the sanctioning authority can approve and sanction. Posting in incorrect accounts outside average range of value or historical range of value, transactions undertaken at unusual times, frequent cancellations of frequent cancellation of transactions. So these are some fraud risk indicators. And while developing the fraud risk assessment program, these could be kept in mind by the internal auditor's office to design the fraud risk situations for a particular business function. It could be accounting function where all these things could be quite relevant, procurement function or a HR function, or it could be a manufacturing or operation function. But all these indicators could be useful across the board. Poor ethical culture, poor practices such as bullying, tolerance to harassment, uh, significant adversarial relationships exist between managers, and there is substantial sense of entitlement. So any organization where the culture is not appropriate, not ethical, not very, I would say, uh, in line with good ethical practices, there is a deep sense of entitlement, a deep sense of divide between stakeholders. Even the guidance note by the institute on considerations of fraud in financial statements clearly has this kind of an indicator outlined. Poor staff productivity levels, employee disengagement, few over trusted employees, inappropriate reports, transactions created or backed by false result declarations, systems being accessed outside of normal work hours or from outside the normal work area. So these all are fraud risk indicators, will help us design the fraud risk scenarios more effectively along with the management. But it should be applied in the setting of understanding of the business, understanding the organization, and risk indicators into fraud scenarios. Also, as internal auditors, we are duty bound to document fraud risk indicators as far as SIA 11 is concerned. So, all these fraud risk indicators could come in handy as far as your documentation is concerned, and then you showing what are the effective checks and balances in the organization. So, as far as the culture is concerned, for example, you could quantum of declarations being given, the continuous training and development that is happening in the organization against the fraud risk scenario that you have tested the effectiveness of internal controls. applicable to statutory auditors, but it is very relevant to internal auditors because statutory auditors are relying on the work of internal auditors. So while internal auditors are doing their internal audit activity and also doing fraud risk assessments, they should be completely aware and knowledgeable of these indicators that is there as part of the statutory auditor's work, and will come in very handy. So let's quickly read out these critical indicators, fraud risk indicators, and checks and balances which the internal auditor can use as part of their work, because statutory auditors are going to be relying on their work. So there are four baskets here that are made for you: financial indicators, operational indicators, behavioral indicators, and external indicators. Now, what are the relevant topics as far as fraud indicators are concerned? We can quickly have a look at them. And this is only a summary. There is a laundry list to this that is given on subsequent slides hereafter. Maybe we may not have the time to go through each and every fraud risk indicator. However, as a summary, we can look at these four baskets quickly and look at the fraud risk indicators, which would help us designing a fraud risk assessment program and document our fraud risk indicators as part of our internal audit activity. So, what are the financial indicators? First is significant inconsistencies in financial statement. So the first indicator is significant inconsistency in financial statements. So if you find inconsistency vis-a-vis the industry sector, vis-a-vis the accounting policy disclosures, vis-a-vis the previous year's figures, vis-a-vis certain trends that you say you can flag off, etc. So analysis of financial statements, numbers, trending, etc., is critically important for the internal auditor to rule out any fraud risk indicator. Second is unusual transactions or balances. So if there is any unusual transactions or balances which are there in the books of accounts, which didn't exist either before, or they are really unusual in nature. So that could be flagged off and identified. A rapid growth or unusual profitability compared to peers, frequent changes in accounting policies or estimates. So here, let's take one practical example that for the software development industry or sector, it's quite common that they develop a lot of products and they do a lot of innovation. So while they are developing the products, they may have a policy of writing it off over 5 to 7 years. Intangible asset in the organization and carried forward in the balance sheet. And they may have a policy of writing it off over 5 to 7 years. That policy may be depending on that product or the IPR for which they are capitalizing it. However, there could be a change of that policy in between. After 2 years, they would change it, and after another set of 2 years, again they would revert back to the original policy. So this is inconsistency or misapplication of accounting policies to suppress profitability, to increase or decrease the profit figures, depending on the convenience and depending on the requirements of the organization. So such policy flexibility has been identified in the accounting policies and procedures. So flexibility in turnover, especially in key positions, rate of attrition, not in line with industry, very high or unsubstantiated. Uh, Root cause analysis on the employee turnover in terms of the reasons of exit, inadequate segregation of duties in the organization, concentration of duty or authority in few individuals, unexplained adjustments or write-offs. So just balance sheet entries without any supporting documentation or without any supporting could be a potential risk indicator. Lack of internal controls or frequent override of internal controls. Now we have the concept of CARO as well as internal financial controls. CARO has got a long checklist of items which can be translated into a good control environment. Internal financial controls is mandatory beyond a particular threshold of revenue. Now, all these things require documentation by the management. So, if this is missing in terms of document, excessive secrecy or dominance by one or few individuals. On their, but is using a very very expensive vehicle, is taking travel outside very frequently, etc., etc. So there could be some visible indicators, and this is assessment process. So you may have to rely on finding out you're pretty confident demonstrate compliance with the auditing standards. Unusual behavior or changes in lifestyle. What are the external indicators? Frequent disputes with regulators or auditors. There could be frequent change of external auditors as well. Unusual relationships with suppliers or customers. What is meant by unusual relationships? Meaning meeting beyond office hours, meeting on weekends, taking up activities that are, not business-like activities with suppliers and with customers. Significant related party transactions, adverse media coverage or public complaints. So this completes the fraud risk indicator uh, executive summary. The list, as I said, auditors is very long, and it's part of the presentation slides. Later on, we may not have the time to discuss each and every indicator, but from a financial, operational, behavioral, and external indicator, this gives us sufficient food for thought as internal auditors, that if statutory auditors are duty bound to look at it, we could also look at this as internal auditors once to support our entire internal audit activity and outcome, which is being relied upon by the statutory auditors. So this is Appendix 3, the auditor's responsibility relating to fraud, which applies to the statutory auditors and external auditors. As I mentioned to you, quite a lot of indicators have been covered previously in my slides. This is the laundry list that is provided here. At your ease and time, you can perhaps go through this. The last part of the presentation, that is part 4. Uh, and these are the concluding slides and remarks on the fraud risk assessment session that I've had with you. So it would summarize few matters. It would give you some more food for thought. And then we will open up for question and answers for the last 10 minutes or so. So what are the anti-fraud controls that we need to test as part of the fraud risk assessment program is concerned? First is existence of code of conduct. Whether the organization has got a comprehensive code of conduct, whether there is an internal audit department and activity, there is internal financial controls where it is applicable, there is a hotline, there is an independent audit committee in terms of the governance process. There is fraud training for employees, fraud training for managers, executives, There is existence of anti-fraud policy. There are employee support programs. Now, employee support programs are something very, very critical. They are emerging also nowadays. There is a concept of work stress, and employees are going through a lot of stressful situations in their life, and they are, say for example, if someone is going through a divorce proceedings, now that person would be mentally depressed, and would be on tenterhooks. And if he or she has to give a large sum of alimony as part of the court separation agreement, tremendous pressure on that person to equal. So generally, organizations do a survey of employees, large organizations, to check whether they need any support, they need any counseling, they need any assistance. So whether there is existence of such a process in the organization, and as part of that, does the organization identify certain individuals or vulnerabilities where there are possibilities of fraud? So employee support programs are there. Dedicated vigilance department and function, which is also required for listed entities, formal fraud risk assessments, proactive data analytics monitoring, surprise audits, job rotation, mandatory vacation, and rewards for whistleblowers. So these are typical. This is the typical universe of anti-fraud and you can test certain elements as far as uh, fraud risk assessment activities concerned. For controlling fraud in organizations. So BGV, as you already indicated, is the Bureau of Governmental Control Strength in the organization. So BGV, as you already indicated, will control strength in the organization, the anti-fraud setup or program of the organization. So monitoring the doing drug screening and several other. So there are various levels of screening that the organization does very authority where there is abuse possible. It's quite likely that the organization does a deep employment history check, background check, home verification checks, criminal checks, police verification, education verification, reference checking, credit profile checking, and drug screening check. So these are some critical anti-fraud measures and checks that organizations are doing. Summarizing in terms of the statistics, frauds are detected through almost 43% through tips and whistleblowing programs. That comes right at the top. So, as far as fraud risk assessment and anti-fraud controls are concerned, this is one check the internal auditor should do, whether there is a robust whistleblower program, fraud hotline available in the organization or no. And if it is not, it should be one of the key recommendations made by the internal auditor. More than half of the tips are coming from employees, and then by customers, and then from vendors. So a whistleblower program that encapsulates the universe of employees, customers, and vendors would be quite useful. And the gradation in terms of the 43%, you can see the breakup: 52% coming from employees, then from customers 21%, and 11% from vendors, and then others. The most common mechanism used to report fraud, so the most common is web-based notifications, emails, and then telephone calls. These are the three channels through which the whistle blowing activities are happening. More than half of all cases came from these five departments. So the accounting department contributes 12% to the frauds that are reported. operations 14%, sales 12%, customer service 9%, and executive and upper management 9%. Concluding last two slides on SI 11, considerations of fraud in an internal audit. Internal auditor should have reasonable knowledge of factors that might increase the risk of opportunities for frauds in an entity and exercise reasonable care and professional skepticism while carrying out internal audit activity. So, in the course of our deliberations in the last 1.5 hours, we have gone through so many fraud risk indicators that would enlighten your mind and your scope of work in terms of what are the factors that might increase the risk of opportunities for committing fraud, and how reasonable care can be exercised and professional skepticism can be exercised. The least which we can do as internal auditors to design the fraud risk assessment is to check out the top 8 or 10 anti-fraud controls that have been explained earlier as part of the internal audit activity. From a documentation perspective, the internal auditor should document fraud risk factors identified as being present during the internal auditor's assessment process and document the internal auditor's response to any other factors. If during the performance of the internal audit, fraud risk factors are identified that cause the internal auditor to believe that additional internal audit procedures are necessary, the internal auditor should document the same. So the SIA considerations of fraud in an internal audit talks about not only documenting the fraud risk activities, testing the associated internal controls, and if required, additional internal audit procedures need to be designed and tested. The internal auditor should, depending on his comfort and confidence on the system of internal control, extend the sampling and extend the exercise and procedures to garner more confidence on the entire uh, universe of internal controls. So with that, I come to the end of my session. I would like to thank each one of you for a patient hearing and would open up for any question and answer. We just have 5 minutes to go.
Hello. Hello. Sir, participants want to know
Yeah.
how can proactive fraud prevention measures be aligned or balanced with reactive fraud detection methods?
How? Sorry, proactive?
How can proactive fraud prevention measures be aligned or balanced with reactive fraud detection methods?
Okay. So, what I would like to state here is that fraud risk assessment program as a principle in the organization. So just as we have any policy in the organization, like a code of conduct policy is there, or a procurement policy is there, or a human resource management policy is there, in a similar manner, to bring in proactiveness within the organization, there should be a fraud risk assessment policy and a program that should be institutionalized from the highest level, from a top-down manner to make it proactive. So when we say proactive, it means engagement and involvement of resources. The organization should be in the position of understanding what are the issues that are arising. Now, large listed entities are having vigilance department. So that department is quite proactive in implementing such measures. But even MSME organizations can become proactive when they see organization is to implement a good whistleblower policy and reasonably priced services. So proactiveness can be gauged through following a policy principle and a whistle. Reactive measures are concerned, they could be accredited forensic or ethics examination or a forensic exercise. And this could balance out and then taking tough action against the people who have breached or violated the norms of the organization to send out a deterrent or a message that action will be taken against anybody who has breached the policies and
Hello.
any other.
Hello.
Yeah, Shweta, any other?
Sir, the presentation was excellent, and participant wants the PPT for the same. And we don't have any more questions, so I would like to extend the formal vote of thanks for conducting a webinar on fraud risk assessment and showing us where are the indicators and how we can prevent and analyze if the risk has already been happened or the fraud has already been happened. So thank you so much, sir, for
Thank you.
guiding us and enlightening us on the topic. Thank you.
Thank you. Thank you. Thank you.